Europe again getting much of the blame for the market sell-off, and we're joined by Euro-Pacific senior economic consultant John Browne, who worked with British Prime Minister Margaret Thatcher. And John, let's start here. You say the European Union is one big fraud.
Oh yes, when I was in Parliament it was quite clear. The European Union was cobbled together based on deception, fraud and downright lies. And they surrounded Margaret Thatcher and they forced her into signing various documents which she was totally against. And it's been forced on the British people, approximately 68% of whom want to get out. But they're never given a chance, despite cast-iron guarantees by Prime Minister Cameron that some people call Cameron. He promised this to the British electorate. All three parties promised a referendum. None of them have given it. And the German people have never been given a choice. The French people were given a choice and voted against, but they then had to go back and re-vote, like the Danes and the Irish. It's been a fraudulent thing throughout.
I guess lies work as long as people continue to believe them for a while. Now, the Dow's down 140 points, and will you please explain something to me, John? Why should we be so terrified of more troubles in Europe when by now we're accustomed to this and the banks ought to be hedged against this by now?
Well, Europe is very big. It's the biggest economy in the world at 17 trillion GDP, 25% of world trade, China's largest customer, and the second biggest currency is the euro, so it affects the whole world. And our politicians in Europe have borrowed completely irresponsibly, and they've just now the chickens are coming home to roost. They're trying to distort markets. I mean, all this scare about LIBOR when the largest distorters of interest rates by far are central banks, the Fed, the Bank of England, the Bank of Japan. All these people distort interest rates all the time. And, of course, the EU banks you mentioned were encouraged or persuaded to buy sovereign debt and enticed by being told they wouldn't have to hold reserve requirements against it. Now these bonds are becoming worthless, and this is going to affect the entire banking community of the world, because these are very large banks with relationships with American banks and banks throughout the world.
Yes.
So it's a very serious situation.
Okay, now, you actually have some unusual advice, I think, coming from Euro-Pacific, because I think that Peter Schiff is pretty much thinks the U.S. dollar is headed nowhere but down, down, down over the long term. But you think that actually people could buy U.S. dollars here, they will be stronger against the euro, despite...
Yes, and I agree with Peter. Over the long term, the dollar's in almost worse shape than the euro. But in the short term, it's seen as the panic relief, and therefore people run into dollars out of euro and yen into the dollar to get yield. The sensible people run to gold, but of course you don't get an income off gold, but you just get capital gain, total return. But in the meantime, people are tempted to run into the dollar, and as long as they're tempted, the dollar will rise in price, but it's only a temporary phenomenon.
All right.
Before it, too, collapses.
All right. Okay, thank you very much for being with us on this rather panicky day. John Browne, have a good day, sir.
Yeah, you want to short real estate.
All right.
The dollar, the yen.
Okay, thanks.
Thank you very much.